Do you feel like no matter how hard you try, you're still not building the wealth you dream of? What if I told you that the key to long-term wealth isn't about finding that one big opportunity, but about consistently implementing a few smart strategies? In today's video, we're breaking down the top 5 long-term wealth strategies most people ignore. These strategies aren't flashy, but they have been proven time and again to help you build lasting wealth. Stick around, and I'll show you how you can set yourself up for financial freedom. So let's dive in. 1. Tax location optimization. The first strategy that most people overlook is tax location optimization. It's not just about what you invest in, but also where you hold your investments. Many people focus solely on the returns of their investments, but fail to consider how much of those returns are going to be eaten up by taxes. Strategic investors use tax advantage accounts like IRAs for 401(k)s or Roth IRAs to hold tax-inefficient assets, such as high-dividend stocks and bonds. By placing these assets in tax-deferred or tax-free accounts, you reduce the annual tax burden on your investments. On the other hand, tax-efficient assets like growth stocks, which are taxed at a lower rate, can be held in a taxable brokerage account. Why does this matter so much? The idea is to minimize the amount of taxes you pay, allowing more of your money to stay invested. By optimizing the location of your assets, you're essentially reducing the tax drag on your portfolio, which leads to better overall returns in the long run. If you fail to implement tax location optimization, you could be paying significantly more in taxes each year, which ultimately reduces your wealth accumulation potential. This strategy is often overlooked because it requires a bit of planning, but it can make a significant difference in your overall financial success. The earlier you start optimizing your tax locations, the more you'll benefit from the growth of your investments without the heavy tax burden. 2. The power of low-cost indexing. The second strategy most people ignore is the power of low-cost indexing. You probably heard about stock picking or actively managed funds, but did you know that the most reliable way to build wealth is by investing in low-cost index funds? Here's why. When you choose actively managed funds, you're paying higher fees to fund managers. Those fees act as reverse compound interest, eating into your profits over time. Over a 30-year horizon, those high fees can add up to hundreds of thousands of dollars lost in potential gains. This is where low-cost index funds come in. They offer the opportunity to invest in a wide range of stocks for a fraction of the cost. Index funds track broad market indices like the S&P 500, which means your money is spread across hundreds of companies, minimizing risk. These funds generally have low management fees, making them ideal for long-term wealth building. Not only do you get exposure to a diversified portfolio, but you also benefit from the market's growth over time. What makes this strategy so powerful is its simplicity. You don't need to pick individual stocks or try to time the market. Instead, by investing consistently in a broad index fund, you can ride the market's growth and let compound interest work its magic. If you haven't already, this is a strategy that's easy to implement and can significantly boost your portfolio's value over time. 3. Estate and legacy planning early. The third strategy is about planning for the future, estate and legacy planning. Many people put off thinking about their will, trust, and estate planning, assuming it's something that can wait until they're much older. But the reality is, wealthy individuals don't wait until they're in their 70s or 80s to think about these things. They start early, often in their 30s or 40s. Setting up a revocable living trust early in life can help protect your assets from probate costs and ensure that your wealth is distributed according to your wishes, not state laws. By establishing this trust, you retain control over your assets while you're alive, and upon your death, your beneficiaries can avoid costly probate. Besides the emotional peace of mind it offers, a well-thought-out estate plan helps minimize estate taxes, which can eat into your wealth when passing assets to heirs. It's also an important tool for asset protection. Without a trust, your assets could be subject to lengthy court proceedings and high legal fees, which could delay the distribution of your wealth or reduce its value. Estate planning isn't just for the ultra-wealthy. It's something everyone should do. The earlier you set up your plan, the easier the process will be, and the more you'll protect your legacy from taxes and unnecessary expenses. By planning your estate early, you create a smoother, more efficient way to transfer your wealth to the next generation. Whether you're passing on real estate investments or family heirlooms, Having a plan ensures that your wealth remains intact. Don't leave it to chance. Setting up an estate plan today can save your heirs significant stress and money down the line. 4. Strategic use of leverage. The fourth strategy for building wealth is the strategic use of leverage. While many people think of debt as a negative force, it's important to note that not all debt is bad. In fact, good debt, such as low-interest mortgage debt, can actually accelerate your wealth building when used properly. Real estate is a prime example of how leverage can work in your favor. By taking out a mortgage with a low interest rate, you're able to buy property that appreciates over time, while your tenants pay down your mortgage. This allows you to build wealth through the increasing value of the property without having to pay for it all up front. You can also use leverage in the stock market by utilizing margin or portfolio lines of credit. These financial tools allow you to borrow money against your existing investments to access liquidity without selling assets. It's a way to take advantage of market opportunities without disrupting your investment strategy. Of course, using leverage requires discipline. If you take on too much debt, it can lead to financial stress. But when used carefully, leverage can multiply your returns and significantly increase your wealth. It's important to use leverage to acquire appreciating assets, not for consumption, to ensure it adds value to your financial strategy. When used correctly, leverage can significantly increase your wealth-building potential. The key is to ensure that the debt you're using is productive debt that helps you acquire income-generating assets rather than liabilities. 5. The stay rich mindset risk management. The fifth and final strategy for long-term wealth is adopting the stay rich mindset. Most people focus so much on getting rich that they overlook the importance of staying rich. Achieving wealth is one thing, but protecting it is another. The stay rich mindset involves diversifying across multiple asset classes and ensuring your wealth is well protected from risks like lawsuits, economic downturns, or unexpected financial shocks. Why is this important? Because the wealthy understand that wealth doesn't just come from making money, it comes from keeping it. That's why they focus on diversifying their investments across multiple asset classes like real estate, stocks, bonds, and private equity. Diversification helps reduce the risk of losing everything if one market or investment performs poorly. Additionally, wealthy individuals also take steps to protect themselves from lawsuits or unexpected financial setbacks. This includes maintaining proper insurance coverage, including umbrella insurance, which provides an additional layer of protection against catastrophic legal claims. By focusing on risk management and protecting your wealth, you ensure that your assets remain secure over the long term. This is essential for anyone who wants to maintain their wealth and avoid costly mistakes that can wipe out years of hard work. The stay rich mindset is all about maintaining and growing your wealth with safety nets in place. With proper protection, you can weather financial storms, secure your assets, and keep your wealth intact for generations to come. Protecting your wealth is just as important as building it, and with the right strategies, you can do both. So there you have it. These are the top 5 long-term wealth strategies most people ignore. Whether it's tax location optimization, low-cost indexing, or using leverage strategically, these strategies provide a roadmap for building long-term wealth. They might not be the most glamorous or exciting strategies, but they're the backbone of financial success for the long haul. The key takeaway here is that building long-term wealth is a marathon, not a sprint. It's about making the right decisions early on and consistently sticking to them. The earlier you start implementing these strategies, the more you'll benefit in the long term. If you found this video helpful, be sure to like it, share it with someone who could benefit, and subscribe for more tips on building long-term wealth and financial freedom. It's never too early to start making smart financial decisions. Take action today and secure your future. Thanks for watching, and I'll see you in the next video.